I published a new blog post today discussing my trades over the past few days. I am trying to do as little as possible with my investments now, but am not succeeding. Doing nothing seems more prudent to me now, but I did enough buying and selling today, June 26, to write a new post for next week. I started to profitably sell some long maturity treasury notes and tips today, which are rallying in response to the decline in interest rates and a greater likelihood of Fed rate cuts later this year. An example, which I will discuss in my next post, is selling two of the 4.5% coupon treasury notes maturing on November 15th, 2023 at 102.5978, realizing a gain of $76.37 on those two notes. That particular note was bought in one bond lots in late December 2024 and early January 2025. The government's third estimate for first quarter real GDP growth is fueling the decline in interest rates and the increased probability of a Fed rate cut. I would note that the 10-year Treasury went up 100 basis points in yield starting last September as the Fed cut the federal funds rate 100 basis points, with the first cut being 50 basis points in September 2024. Someone may want to tell Trump about that recent history, since he is pressuring the Fed now to make a 200 basis point cut. Importantly, in the GDP report released by the government earlier today, this was its third estimate for first quarter real GDP. First quarter growth in personal consumption expenditures was revised down to only 0.5% from an already weak 1.2% in the government's second estimate. PCE growth was reported at plus 2.8% in the second quarter of 2024, 3.7%, up 3.7% in the third quarter, and up 4% in the fourth quarter of 2024. And it is now the third estimate for the first quarter is that it was only up 0.5%. And keep in mind that the U.S. economy is consumer-led, with about 70% of GDP growth connected with consumer spending. The recent stock market rally, which hit a new high today in the S&P 500 intraday, is probably due to the Iran-Israeli ceasefire as well as the downtrend in interest rates. The general consensus among stock investors, in my opinion, is that Iran is no longer a threat to Israel or to anyone else. Stock investors have accepted for now that the administration's claim that Iran's enrichment program has been totally and completely obliterated, using the phrase that Trump has used several times since the Air Force dropped MOPs on the enrichment facilities. There was a preliminary assessment made by the DIA, Defense Intelligence Agency, that questioned this conclusion, but that did not stick with investors for very long. I will link in the More column a publicly available assessment from the Institute of Science and International Security that concluded that the U.S. and Israeli attacks, quote, have effectively destroyed Iran's centrifuge enrichment program, end quote. That conclusion may prove to be too hasty. If Iran refuses to allow inspectors from the International Atomic Energy Agency who have been and still are in Iran to continue their inspections, that may indicate that the core of its nuclear program is still operational and that Iran intends to, as silently as without any fanfare, as much as at least as much as possible, accelerate its enrichment program to nuclear weapons grade material.